The internet has been abuzz talking about turning insurance claims into retail deals and my roof and sue method. Recent videos created, is it best for the homeowner to finance an insurance claim, the dangers for a homeowner? Inside this video, I'm gonna break down why it's almost never unethical for a customer to enter a roof and sue agreement and how it actually is better for the customer. And I know there's going to be a lot of opinions. There is some situations where you wouldn't want to file a claim, you wouldn't want to go through the process, and a lot of that has to do with the age and condition of the roof, if there's legitimate damage. And so this is only for roofs that have legitimate damage, have a decent storm date. Now this is a tile roof right here, and this is the neighboring property. Now we had high wind speeds from Hurricane Milton, but from a recent storm we don't have winds over 70 miles an hour. Now, single nail fastened tile roofs can get damaged with 60-mile-an-hour winds, but filing an insurance claim on that roof with no good storm data in the Florida market means that we would have probably a less than 50% chance to win. You know, having this person enter into an agreement that guaranteed that they could get 50 to 80% of their roof covered may not be the best fit, but one thing's for sure, this project here, it was the key catalyst to speeding up the process to less than 90 days, to winning full replacement cost benefits, and to giving this customer a savings on their insurance premium, a better quality roof. And I'm gonna break it down real quick. Now, as I give you a little tour of this project, let me kind of break down what happened. Hurricane Milton came along. I'm gonna show you some previous damage photos, what this roof actually looked like, but pieces of this tree fell onto this roof, and all over the roof tile were broken. It looked like footfall. It didn't quite look like wind damage, but it was actually pieces of this tree that fell on the roof. So the roof had a ton of legitimate damage, as you can see in the cracks. But even though that the insurance company came out here and looked at the roof, what did they say? That it was wear and tear, that it was pre-existing damage, and they pretty much completely denied the claim. And for us, that's obvious bad faith. And for a customer that had been denied by their insurance company, Mr. and Mrs. Bowman were facing something real. Now they had a 20-year-old or 18-year-old tile roof. They're gonna be dropped by their insurance company in the next year or two. There's no way they could afford paying $77,000 out of pocket for this roof. And so after being denied by the insurance company, it was more real that their back was against the wall. Now, here's what we did in this scenario. First step, we signed a contingency agreement. We called the insurance company, we filed a claim. On that day, we walked them through the process and we got them approved for a no payment, no interest 12-month loan. This was for the full amount of the roof replacement to show the insurance company that we meant business. To show the insurance company that if they didn't pay to replace the roof, that we were gonna replace the roof anyways and hold them accountable in the court of law. And I set the expectation clear from the jump. Next important thing we did was we met the adjuster, got damage, got a little coverage extended. But from that point on, the customer was unsure, should we move forward with the job even though we didn't get approval? And this is the question that customers always have, and that is, what if the insurance company denies the claim? It's a very legitimate question. And during this job, we told them, it's like the cheapest that you can get a new roof is today. As soon as you get a new metal roof, you're gonna start saving on your insurance premium. With tariffs and inflation, if you wait a year for a metal roof, it could be $10,000 more. So we're gonna get you a good deal on a metal roof, and you have so much damage that we're gonna win this case. And I didn't guarantee we were gonna win it, but I said, dude, if we could get at least 50% of your roof covered, that would be big savings, and that'd be good, right? And the customer said yes. And so we installed a stone-coated steel roof system, and one thing's for sure, like, the insurance company, they denied the claim. We had an attorney, and the attorney was going back and forth getting no offers. When the insurance company found out about our magic letter, that means that our attorney said that we intend to repair the property. Please pay the claim as presented. We went ahead and got approved for a loan, and we're gonna incur the cost. Not even 2 weeks after we sent that letter, showed them a copy of the loan, that this customer win full replacement cost benefits. So, is it better for the customer? The customer had to pay their deductible plus $2,000 for this roof. it was the catalyst to win the claim. Why? Because it showed that the customers were incurring the cost. After more than 5,000 lawsuits and litigation cases, a lot of times the plaintiffs or insurance attorney would ask us, if the damage was that bad, why didn't the customer just fix it on their own dime? And it was a real legitimate question. And so if you want the power of the purse, if you want leverage on the insurance company, then you just go ahead and get a loan. You get funded on a 12-month, no payment, no interest. You guarantee that you're getting a new roof at the cheapest price that you can get it. You're showing the insurance company you're not just looking for a free roof, and you increase your ability to win the hearts and minds of a jury of your peers when they're looking at legitimate damage and they see that you incurred a legitimate cost. There's no longer an argument over what this roof should cost, what it would cost. It takes one whole section of the argument completely out of the picture. And so here's what we did to protect the homeowner. Before we built the roof, we had an engineer came out here. The engineer did his inspection. He, of course, from meteorologic perspective, found wind speeds to justify the damage. And he also wrote a report that said the roof needs to be replaced due to storm damage. And because we have an insurance attorney and we have our documented report, we have an engineer's report, we've given the insurance company a magic letter which says that you have 30 days to inspect the property before we move forward with replacement. We forced the insurance company's hand. And it was within a week that we gained settlement. I think this total settlement was somewhere around $75,000. It did help that this one had some interior damage. That always increases the case. But as far as ethical, is it ethical? Well, here's the thing. Here's the reason why. In Florida, it's a little bit different than Dallas, Texas. In Florida, this customer right here with a 15-year-old roof is going to be forced to pay to replace their roof within the next year or two. How do I know that? Because systematically, insurance companies are trying to get 15-year-old shingle roofs and 15-year-old tile roofs off their books. They use drone, they use AI, they use permit data to find out who has an old roof. They send out inspectors, they verify that it's old, and then they drop coverage. They say that you have to get a new roof to keep insurance. It's happening here in Florida more than it's happening anywhere else. And so for us, it's a little bit different. We have to take a proactive approach. If this customer has legitimate damage from winds that constitute that damage, it is my duty to explain to them why he wants it covered, because he's up against the most evil negotiators in the world, the insurance companies, and they want him to fear door-to-door roofers. They tried to pass a law here in the state of Florida that said we couldn't use the word insurance claim and roofs in the same verbiage. Why? Because they want to control. It's the matrix. The people who make the rules are the people with all the money, and the people with all the money are the people with the insurance company. Number one lobby in the state of Florida, the insurance lobby. Who do they control? The politicians, because the politicians get elected. And guess what? Insurance is a business in the state of Florida. The state of Florida is an insurance company, Citizens Insurance, that's backed by Lloyd's of London. And so, yeah, there's a lot of fake news when it comes to roofing claims. They said that insurance companies went out of business because lawyers sued for too much and because insurance roofers went door to door and offered insurance claim roof replacement on roofs that didn't have legitimate damage. Number one, insurance companies don't pay for roofs that aren't legitimately damaged. They fight like hell. Here's the pictures on this roof. There was tons of legitimate damage. They denied us. We got an attorney. We won the case. But this happens on the most legitimate claims. Number two, they're going to be proactive to drop you. So they know that you may have damage, and that's why they want you off of their books. And you just don't have the education because they know they're paying for this roof, they're paying for that roof, and you just don't know what's going on. See, if the insurance company was truly like a good neighbor, they would give you a call. They would tell you, there's been a lot of replacements in your zip code on roofs over 15 years old. You should probably get yours checked out. But if that would mean that they're going to owe you money, you think they're going to tell you about that? Heck no. And so that's why I believe, specifically, if you have a roof over 15 years old, you have legitimate damage, in no form or fashion do I go out and look for the most damaged roofs. I look for the oldest roofs. I find damage on the oldest roofs. And if I know that coverage can be extended, I tell that customer, we're gonna fight like hell to get you 50 to 80% covered. This is a creative way to make it affordable, but if they don't do it, they're gonna pay full price, and it's gonna be more than it is today. Even if they pay for 100% of the roof, I'm gonna give them a deal on the roof, which is the cheapest that they can get a roof is today. And so that's why I believe that basically it's never unethical when a customer has a 15-year-old roof, when they have legitimate damage, to push them into a scenario just like I did the Bowmans here. Because if the Bowmans would have lost the claim and we wouldn't have won, they would have still got an awesome stone-coated steel roof for $77,000. They'd have to make payments until they got out of the house, but that would reduce their cost of insurance. Eventually, it may pay for itself, but the truth is that they've increased their most important investment, their home. And so I just believe that anyone out there putting out information on how it's unethical to move insurance to retail has never actually done it. Y'all are taking advice from guys that are sitting inside of a podcast studio that aren't on the streets. And that's what makes me a little bit different. I'm a champion for the blue collar American dream. I do it for the roofers. I do it for the roofing business owners. But selling this job was one of the first insurance to retail jobs. It started a trend. Now we've got more than 150 insurance to retail loans in the pipeline. In the last quarter, it helped us to weather not getting a hurricane, because we take legitimate damage claims, mostly focusing on shingles, looking to mingle. And we know that if we got 1, 2, 3 damaged shingles, that's probably going to be enough for us to make a case. And a lot of times these people upgrade to metal roofs. And so don't be listening to people giving you roofing growth advice, roofing sales advice that you wouldn't trade places with. And if they're giving you advice from inside a podcast studio and they're not doing deals in today's market, maybe they're not as cool as you think they are.